was another dismal show and more evidence that South Africa's economy is in real trouble. But it was a massive decline in agricultural activity that pushed the economy into recession.
The big surprise was the extent to which agricultural GDP contracted for a second consecutive quarter. The first quarter figure was revised downwards for agricultural GDP from minus 24% to minus 33.2%. And the second quarter figure was not much better at minus 29.3%. Obviously, the drought in the Western Cape has now taken its toll in the figures that we are seeing.
Transport, storage and communications showed a collective decline of almost 5%. Manufacturing too declined further in the second quarter. Trade, catering and accommodation was also negative, which means that tourism is not making the strong contributions as it usually does.
We've had too much focus on really top-down kind of growth as opposed to making the entire economy fertile from the bottom up. And that's where we get, for instance, small and medium enterprises really being important. Our manufacturing sector in South Africa really isn't doing very well. We haven't seen the kind of growth we need to be seeing in that sector.
What's more concerning is the 1.3% decline in household expenditure. It's the first contraction since early 2016, which means that consumers are really taking strain, spending significantly less on transport, food and clothing in particular.
The reasons are quite obvious to see. The rate of VAT was increased by 1% in April. The fuel price went shooting up through the second quarter, and on top of that, people started revising down their expectations that interest rates might fall, and in fact started getting scared that interest rates might rise.
South Africans are already battling with a high cost of living. The weaker rand and rising oil prices are adding to inflation. This could force the Reserve Bank to hike rates when its Monetary Policy Committee meets later in September. Sumitra Nydoo, CGTN, Johannesburg, South Africa.